expected that I would be talking about a business opportunity in infertility in a country with a population of 1.3 billion people. Very glad to be here today. I see a lot of esteemed doctors in the audience. I was not smart enough to be a doctor, so I became an engineer. And I couldn't become a good engineer, so I ended up becoming an investor. I'm always scared of talking in front of doctors because you're so sharp, it's hard to get away with things. But Anuj got me into it, and so here I am today. Happy to give you a perspective of how we are looking at healthcare overall in India, and then focus down on single specialties and infertility in particular. Healthcare is a very important sector for private equity and venture capital funds in India. It's amongst the top 5 sectors. As you can see on this chart, we invest about a run rate of $1 billion every year in the sector. Not too small, but not too big compared to some of the other sectors like financial services and consumer and internet, which get a lot more capital. Even if we compare it to some other countries like China and US, we have only scratched the surface in terms of investments in the healthcare sector. China is at 4x a run rate compared to India, and US is in a different league at 27 times the annual investments in healthcare compared to what we do in India. So there is a lot of headroom to make more investments in the healthcare sector in India. And from a return perspective, the sector has been okay for the investors. Again, a top 5 return generating sector. There has been a lot of variance in the returns though. So healthcare is a very long gestation investment sector given the various challenges that we have to deal with the sector in India. The number one challenge in healthcare is, as all of you are aware, the low affordability in India. Prices for similar procedures in US would be anywhere from 6x to 10x of what they cost in India. So you have to operate under that constrained environment while your capital intensity is almost as high as some other countries. Real estate cost to put up hospitals or physical centers is equal, if not higher, in some cities. Cost of medical equipment, given that most of that is imported, is again similar to what it would be in some of those countries. So that makes it a difficult sector to scale, where your return on capital is very low, unless run very, very efficiently and with a laser-sharp focus on operations. Other challenges, the big one is a limited reimbursement environment. So unlike the West, we are a self-pay country. More than 60% of the healthcare spend happens out of pocket by individuals, which makes the buyer universe, as we call in our investment lingo, very, very fragmented. And as the buyer universe is fragmented, the supply universe also ends up being fragmented. Only once you have the payers getting aggregated, which is now beginning to happen with more private insurance coverage and the Ayushman Bharat scheme, where government will start playing a bigger role as a payer, we will see healthcare businesses developing more scale and the chains growing much faster than single centers or mom and pop hospital businesses, healthcare businesses. The last aspect that I want to highlight on this slide is the social and the emotional aspect. As a society, this is something that we have to carry in our stride, the humanity aspect around healthcare. We are dealing with lives, we are dealing with life-threatening situations, and we are dealing with extreme poverty. So while we are all motivated commercially and want to generate returns, because that's the only way to create infrastructure in the country, charity is not scalable. But at the same time, we have to take the bottom of the pyramid and these life-threatening situations along with us and make sure we work along. Because of these challenges, last 3 years have been very tough for the industry, and especially for the multi-specialty hospital sector. As you will see on this slide, the top 3 hospital companies in the country have had negative to flat EBITDA growth over the last 3 years. So that is a validation of the fact that healthcare is not an easy sector to make investments in. This is consistent with the stock market performance. So most of the healthcare stocks have actually seen negative returns over the last 2 years, and most of them are below their IPO values for the IPOs that have happened over the last 2 to 3 years. I mentioned this earlier, but scalability is the number one issue in our minds with the healthcare sector in India. If we compare India to US, we are at about 1/8 the GDP of US. And if you just draw a corollary for every other business, you should have businesses which are at around the same proportion. But if you look at hospitals, for instance, the largest hospital group in India, Apollo, is about $1 billion of revenue. The largest hospital group in US is at about $47 billion of revenue. So Apollo is a little more than billion, maybe 1.5. And hence, there's a 35x differential versus there being a 8x differential in GDP. And this differential gets even more exaggerated as we go into some other segments of healthcare. As you go into diagnostics, we are looking at a 66x differential. Dr. Lal's, which is the largest chain, or SRL, depending on how you look at it, are at about $200 million of revenue. And LabCorp or Quest are at around $10 to $11 billion of revenue in the US. If we move to dialysis, it's a 400 times differential. The point I want to make is it's not easy to scale healthcare businesses in India, and that's a big challenge we face across segments, and especially in IVF. We talk about under-penetration, and everyone quotes this number that we are at only 13 beds per 1,000 people in India. Global average is at 27. Countries like China and US are around 30, 35. And hence, there is a lot of room to grow in India, and you can keep growing for the next few decades. However, when you get down to looking at it on a city-by-city basis, what we have found is urban India is actually at 34 beds to 1,000 people. So we are no more under-penetrated from a multi-specialty hospital perspective in urban India. There is a lot of capital chasing the limited wealth that is there in these metro cities and maybe a few tier 1 cities. Beyond that, we have an access problem, but that's where there is no paying power. So as a country, we are already well penetrated where there is a well-paying population. And this is a trend which is also relevant for IVF. If you look at cities like Mumbai, Delhi, Bangalore, the number of cycles you do per fertile women, or whichever metric you use, is much higher than where it would be anywhere else in the country. So under-penetration, in my view, is actually overstated, and we need to look beyond that to see how we can scale up businesses in India. Having said that, healthcare still remains an attractive sector, and that's the reason why you still have a lot of us over here at this conference today. So there are a lot of investors over here. Overall, we are at around $100 billion of market size, expected to be 2.5x of that in the next 4 to 5 years, so growing at 15% year on year. Some segments, such as yours, IVF, are growing much faster at around 20% or maybe even higher. And all of you know the reasons for this, but the rising income level and affordability, which was the number one issue, is getting addressed, and that's the biggest driver for this. So McKinsey estimates that the middle class population will grow 3x in the next decade, from 30 million to 90 million people, households in the country, which is going to be a big driver of more healthcare spend in the country. What do we look for as investors when we look at these healthcare businesses? So investment considerations, I break them into 3 parts: scalability, unit economics, and the growth potential of the business. So scalability, and I've used some jargons here like TAM. I just wanted to get back to the medical fraternity who keep using jargons like ICSI, PICSI, PGD, PGS. So this is our jargon. Total addressable market, total size of the market that you can serve. That's a key determinant of whether the industry and the business can be scaled up or not. Entry barriers in the industry, again, determines whether you can scale it up or not. And more importantly, in business like yours, revenue per facility, because unlike a multi-specialty hospital, which can do $100 million, $200 million, maybe in case of Medanta, a lot more out of one center. In your business, which is a lot more distributed business, the revenue per center is going to be much smaller. And hence, to scale it, you will need to keep putting in a lot more new centers, and that becomes an important parameter. On unit economics, it's the margins that you can generate. Structurally, the business should be profitable. Asset turns, so the amount of capital you put in to set up a center, how much revenue can you generate from that? and hence the return on capital employed. In a fixed deposit in a bank, you generate anyway from 7 to 8%. A good healthcare business in India should generate at least 18 to 20% for people to take the equity risk to invest versus putting their money in a fixed deposit, which is almost secure. And finally, the growth potential. So what is the level of real underpenetration in the markets that you are serving? What is the growth in disease burden? What is the regulatory environment looking like? What changes are expected? Competitive intensity in the sector, and the trends of consolidation, etc., in the industry. And when we run these parameters on the different healthcare segments, so I've just taken 3 over here to compare with your industry of IVF, comparing it with multi-specialty hospitals, with diagnostics, and with ophthalmology chains. You will find that multi-specialty hospitals score very high on scalability. With one hospital, you can generate a lot of revenue. You'll have a lot of operational efficiency. A lot of people have a few good doctors, create centers of excellence in a one multi-specialty hospital, and you've got a business going. Harder to do in IVF, and hardest to do in diagnostics, where from each collection center, you're generating only a few lakhs a year. From a unit economic perspective, IVF is actually a very interesting industry. For a capex of about 70 lakhs to 80 lakhs, you can get started with an IVF business, and to put a good IVF center together, maybe you end up spending 4, 5, 6 crores. But that's about the capital you need, and the operating expenses are also pretty low. You can generate pretty decent margins of 25, 30, 45, in case of Indra, even higher EBITDA margins, and which ends up looking like 50, 60, 70% return on capital, which is very healthy, and that capital can then be reinvested to open more centers and grow the business. And finally, from a growth potential, I think we are truly underpenetrated in IVF in India. There is a lot of latent demand. Vikas spoke about 28, 29 million couples who are dealing with infertility. Not all of them have access to IVF. So as the income levels grow and awareness grows and access grows, you will see that demand coming into the industry. So from an evolution perspective, I think we are at a very interesting stage in the IVF industry. We are past the early stage, which was mom and pop centers trying to build a market, individual doctors catering to their individual group of patients. We have moved from that phase to what we call the growth stage. Growth stage is when a few corporate chains come in, there is brand building, there is investments in technology, and there is investments in creating more awareness. And I think this is a very exciting stage to be in. There is multi-year runway for growth. Investments made at this time in the industry will yield good returns. As compared to UK, which I've taken as an example, which is now at a developed stage, they are growing at 2-3% year on year, similar to Germany or France, which are all mature markets. Very interestingly, again, I think we are at an interesting point in the cycle with IVF, because the industry has seen the benefit of innovation and efficiency over the years. So I say efficiency because your cost of cycle per IVF procedure has come down over the years. I will talk about realization, which has actually moved up, but just the procedure cost of doing IVF has come down. As scale has come in, as more people have got trained, we have seen that come down. And the success rates in the industry have gone up because of newer technologies and capabilities that are getting built in. So that's a great equation to have. You are innovating and you are taking costs down. It's a big positive for the industry. From a market perspective, the number of infertile couples seeking IVF treatment is only about 1,20,000 versus a 29 lakh that have an issue with infertility. So there's a lot of headroom to grow that. Our estimate is that in the next 6 years, it'll grow about 2.5x, and there'll be about 2.9 lakhs or 3 lakh couples who will be seeking IVF treatment. Number of IVF cycles will move up from about 1,70,000 to about 4 lakhs in the next 6 years. And the market size today, as we size it up, is about 3,000 crores, which goes to about 8,000 crores. This does not include the potential of andrology and male fertility, because typically fertility people talk about the IVF industry, and there is not enough focus on male fertility, I think, in the country yet. If you size that up and if there was enough investments to be made in that area, I think this 8,000 crores could look much bigger 6 years down the line. And the reasons for growth, penetration remains very low. Japan, about 50 babies out of every 1,000 babies born are born with assistance on the fertility. In US, that number is 15, and India, we are at around 1 to 2. So similarly, if you look at the number of cycles per million fertile women, we are at a much lower rate compared to some of the other countries in the West. Given our population, given our desire to have kids, given our desire to have a family around us, there's no reason this number should look that low. Most global markets are still growing at 10 to 20% CAGR. So this industry is evolving globally. Unlike some other segments in healthcare, this is a high growth industry globally, and India is growing even faster. We discussed the key growth drivers. I don't want to belabor on this, but affordability, the marriages getting pushed out, etc., are all reasons why we think IVF will continue to grow in the country. This is the point on realization. So while per procedure cost has come down, what we're seeing is a lot of add-on procedures are being done. And as a result, the realization per patient is moving up. So while your cost is coming down per procedure, you're able to get better realization per patient, and patients are able to get better clinical outcomes because of better technologies. So laser-assisted hatching is now 30% of procedures versus what it used to be 10% of procedures 5 years ago. ICSI is 90% versus 40%. This is just some data we have from the metro cities. And as a result, if you look at the patient bill, the solid blue on the bottom bar, that's the procedure pricing, but base package, but there is medicines and additional services which can take the realization much higher. The issue with the industry is that industry still remains, the supply remains very fragmented still, and that is because of the low capex and the fragmented customer base, because there is no reimbursements yet for IVF in the country, except for CGHS, which does a very small bit. Number of IVF centers as a result are growing almost in line with the demand for IVF cycles. So we've seen about 14% growth CAGR. The number of IVF centers have gone up from about 600 to 1,300 as of 2017, which number is probably at around 1,500 as of today as we stand over here. This is not good for the industry. Eventually, you will see more consolidation in the industry, and some of the more ambitious chains, some of the better performing chains and centers growing much faster than the mom and pop centers. And we are seeing evidence of that over the last decade. There are a few corporate providers, organized providers who have come into the industry, and they are beginning to consolidate some of the demand. Corporate chains as of today account for only about 10% of the overall centers in the country. Much higher percentage of the cycles they do because they get a much larger cycle load. But as number of centers, it's only about 10% of the overall industry. Scale has benefits, and that's the reason we think the industry will consolidate, and these corporate providers will grow much faster than the 20% industry growth rate that we expect. The obvious benefit is around procurement. We have seen this across all other healthcare segments. No reason why it should not happen over here. You'll be able to lower your material costs significantly as you have scale. Brand is an advantage. This is a consumer business at the end of the day. It's a business based on trust. So as you build a brand and leverage it over a much larger population base, city base, you will see benefits of that coming with scale. You can build a hub and spoke network, invest heavily in technology, in the skilled doctors, embryologists, etc., in a center, do more basic work in other centers and divert flow into those hubs. Again, we have seen that happen across some other healthcare segments. And finally, the ability to attract skilled manpower. If you are a growing organization, if you have multiple levers for growth, you will find good people wanting to come and work with you because they will see a growth path, they will see a career path in the organization. And that becomes a vicious circle. As you get good people, you're able to grow faster. And with growth, you get more good people. And that is what we are seeing with some of these corporate providers, although there is a very varied pathway that some of the leading chains like Indra, Milan, and Nova have seen over the last 5 to 6 years. Growth has ranged anywhere from 20% to 150% in the case of Indira, which has been super aggressive, building out new centers, doing a lot of camps, doing above-the-line advertising. And it seems to be working for them. They have grown fast. They are now at around 400-500 crores of revenue and very high return on capital. Key challenges in the industry are around availability of skilled manpower, especially embryologists. High customer acquisition cost, as we call it as investors. Reproductive care doctors are typically not the first port of call for patients. The first port of call are the gynecologists, which leads to referral practices, which leads to high cost of acquisition for the end care provider. That will change as people invest in brand, and that will change as patients become more aware of the various corporate providers that we spoke about. We see the issue of Me Too competition. Given the low capital intensity, there are too many IVF centers coming up. Weak regulations, I think, is one of the biggest issues in the industry. There has been some movement with the Art Bill of 2014, where surrogacy has now been banned for non-Indian nationals. The draft bill of 2017, I think, needs to be formalized. It has some good guidelines in over there. But more than being formalized, it needs to be implemented very rigorously. You need regulations on quality. You need regulations on clinical outcomes to be able to differentiate from the unethical practitioners in the industry, and for the patients to recognize that. And finally, it's non-standardized treatments and packages, which leads to a confused patient, which again then leads to challenges for the providers in the industry. With that, I will just leave you with some of my thoughts on what I think is the way forward for the industry. Like I said, I think there's a need for a very strong regulatory framework. And more than that, need for a strong implementation, almost something like a PCP and DT kind of implementation, where unethical practices are checked and curbed in the industry. And while that happens, I think it will be great if leaders like yourselves can start self-regulating. There are examples in the globe where IVF centers and businesses report to a central registry. You report your clinical outcomes, and that can be a great way for you to show the direction to the government and to the regulators on the way forward for this industry. There have to be investments in brand. There has to be investments made in technology to create the entry barriers, to create the differentiation, and to bring the best clinical possibilities to the people of this country. There has to be investments in talent generation and upskilling. So we need to set up a lot of training centers, especially for embryologists and for some of the latest procedures. And finally, there has to be some reimbursement environment, either through some private or public funding programs.